Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 27th of November, Friday. As usual in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with our fundamentals. When we take a look at yesterday's market movement, we can see gold rebounding by 0.15%. The pair of GBP US dollar fell by 0.23%. The dollar index rose by 0.07%, while oil retracing by 1.9%. So let's get into details with our headlines of today. First off, we have the gold, where we can see the yellow metal was traded near flat on Thursday as the gold bulls continue to defend the 1800 territory. Now, after the recent sell-off on the safe haven assets amid the positive vaccine news, gold traders are now waiting for further signal during the Federal Reserve December policy meeting. Now, the Fed will most likely bring in reinforcement following the stalled US stimulus package, as the central bank is quite fearful towards how desperate the country and its citizens are in need for further money support. So nevertheless, with loose policies across the world, gold might still perform well ahead while keeping demand in the market as inflation and also a rich hedging instrument. So instruments involved here would be gold itself. Moving on, let's discuss a bit on to the dollar. So overall, there was a slow market trading during Thursday's session. So overall market was little change as we speak, as the US celebrates its Thanksgiving holiday. So after digesting the recent vaccine news, investors will now shift their focus to December's policy meetings from central banks globally. So we have the first week of December would be the Reserve Bank of Australia, followed by the Bank of England and also the European Central Bank during the second and third week, and not to mention the Federal Reserve policy meeting as well. So all of the central bank meetings are expected to be delivered before the Christmas week. So the upcoming central bank meetings are most likely and widely expected to either deliver more accommodative policies or to remain unchanged while waiting for an effective vaccine. So instruments involved would be dollar index itself. So moving on, let's take a look at the news release we have for today. So, unfortunately, as we speak, as the US are celebrating their Thanksgiving, we will not have any major economic data, so we will move right on to our technical analysis. So here's an overview of instruments to be covered. First off, pair of Australian dollar against Japanese yen, H4 showing an uptrend. For the US dollar Swiss franc and the H4 showing a downtrend. For the oil, H4 uptrend, whereas for gold in its H4 chart showing a downtrend. So let's get into details with the chart analysis, starting with the Australian dollar and Japanese yen. So overall, the pair has been rejected from the resistance level close to 77.0, and following the current trading, the pair is testing towards the 76.5, which is a resistance turn support over here. MACD signaling an overall bearish momentum with a death cross formation, suggests the pair to extend lower after successfully breaking below the support level near 76.5. So a further downfall for the pair could be as low as either 75.8 or all the way towards the 200 moving average near 75.5. Overall, we still wait for further confirmation, so cautious investors here are advised to consider short positions after a successful breakout below the support level of 76.5, where a stop loss can be placed 30 pips at 76.8 and a take profit targeted all the way towards the support as we speak just now near 75.8. However, if the pair fails to break below, it might continue its trading within an uptrend, and for the next resistance zone we could see as somewhere as high as 78 as the first resistance, and a new resistance would be somewhere around in the middle, which is close to 77.5. So if the pair fails to break below, aggressive investors can consider entering into long positions. Stop loss should be placed 30 pips from the level at 76.2 and a take profit of 60 pips all the way towards the 77.1. Next, for the pair of US dollars Swiss franc in the H4 chart, now constructing a Fibonacci from the previous high towards the low, we can see that the pair is currently testing back towards the 23.6 Fibonacci near 0.9060. So MACD signaling a bearish momentum suggests the pair to extend lower after successfully breaking below the 23.6 Fibonacci. So following a downtrend, cautious investors are advised to consider short positions after the breakout below, with a stop loss placed 40 pips from the level at 0.9100 close to the 38.2 Fibonacci, and the take profit can be targeted all the way towards the low levels at 0.8980. Next, for the oil in its H4 chart. So overall, oil is still in a very bullish momentum. So however, with yesterday's trading found some rejection from the high levels of 46, and MACD although signaling a bearish momentum. However, in terms of fundamentals and the technical in the daily chart, oil still shows some promising results and can be expected to aim higher towards the target of 48. So in the near term, the commodity might continue its technical correction, where we have a resistance turn support at the 43.5. So overall, in the long term, crude oil is still expected to extend higher. So cautious investors can still consider entering into long positions at the current level 45. Stop loss should be placed below the support of 43.5, most likely at 43, as a 200 pips movement, and take profit can be set targeted all the way towards the resistance at 48. However, for aggressive investors, if the crude oil managed to break below the 20 moving average near 44.7, aggressive investors can consider short-term short positions with a stop loss of 50 pips near 45.2 and a take profit of around 80 pips at 43.9. Lastly, for gold in its H4 chart, now gold has been falling since the month of August from the highest point of 2070 and all the way now towards 1800. So overall, we can see that the safe haven metal continues to find some support near the 1800, the 1800 support, psychological support. So overall, we would wait to see if gold is able to break out below the support of 1800, where a breakout below could send gold falling as far as the next support turn resistance close to 1760. However, if gold fails to break below, it might experience some technical correction from the support level, and the highest point of correction can be all the way towards the 23.6 Fibonacci near 1840. So overall, cautious investors are advised to follow the trend, which is now currently moving in a medium-term short trend, downtrend for the gold. So cautious investors are advised to wait for the breakout below the 1800 support level before entering into short positions, where stop loss can be placed as far as 100 pips at 1810 and a take profit of 200 pips at 1780. However, for aggressive investors who are trading for gold, if we were to attach an RSI indicator, we could see that gold is currently rebounding from the oversold region. So aggressive investors can actually take the opportunity to enter into long positions, where a stop loss can be placed up to 100 pips at the 1800 and the take profit can be targeted all the way to its 1830. So that is all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next week on our market briefing, and happy trading to all.